Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, a framework to keep TikTok running in the US reached, and Donald Trump will iron out the details with Xi Jinping later this week.
Plus, Elon Musk buys millions of Tesla shares following the board's unprecedented pay proposal.
And US Energy Secretary Chris Wright joins us later this hour to discuss his big European swing, powering the AI revolution and much more.
Meanwhile, big swings still being taken in the market, Ed. 9 straight days of gains on the Nasdaq 100. Longest winning streak since November 2023. We are at a new record high. We're up 0.6%. You're looking at the individual stocks underneath this.
Yeah, it's a very busy start to the week in the world of technology. Elon Musk has bought $1 billion of Tesla stock. We will discuss it in the show. It was on the same day that we spoke to the board chair of Tesla. Alphabet, parent of Google, has joined the $3 trillion market cap club and shares are at an all-time high. We'll get to that later on too. Then news. A framework has been reached between the United States and China for a deal that would allow TikTok to continue in the United States. The market reaction was in shares of Oracle. Let's understand why. Bring in Bloomberg senior tech editor Mike Shepard in DC. So we don't know a lot. We know a framework's in place. We know the president of the United States will meet with Xi on Friday. They'll discuss it. What else do we need to know, Mike?
The things that we need to know are pretty much that a lot of the details remain unknown at this point. We have not heard from the Chinese side yet to confirm that they also view that a framework deal is in hand that would allow TikTok's U.S. operations, at the very least, to stay running. We don't know what the terms are of the transaction, what Beijing would be willing to hand over, and that includes, Ed, the algorithm. This is the recommendation software that is really viewed as a crown jewel of TikTok's operations globally. And the question has always been, would Beijing allow ByteDance, the parent of TikTok, to part with at least some of that recommendation software to U.S.-based buyers? Unclear whether that's going to happen, and unclear whether the terms of this transaction will satisfy the national security terms that the China hawks who pioneered the legislation in 2024 requiring the divestiture by ByteDance of TikTok or a ban, whether they will be satisfied by whatever they see. A lot will ride on this phone call Friday between Xi Jinping and Donald Trump, Ed.
And boy, Mike, is there a lot to discuss between Xi Jinping and President Trump, and not just TikTok, but Nvidia, another key chip within this whole negotiation. And we understand that China is ruling that Nvidia in some way is being deemed, well, a monopoly, or at least violating anti-monopoly laws. Can you take us up to speed?
Well, you know, Kara, the announcement today from China, from their state competition agency, that found Nvidia violating anti-monopoly laws in the country. It's no coincidence. The relationship between the U.S. and China is very tightly orchestrated and stage managed. And this ruling that was announced earlier this morning really is a message to the U.S. Going after the most valuable company in the world, the provider of the chips that are powering the AI revolution, that are seen as essential not only for Meta platforms and all the other U.S. hyperscalers, but a lot of other Chinese companies that have favored the H20 chip, for instance, in building their own models. The Trump administration has recently given back permission to Nvidia to resume sales of that chip. But now we are seeing this headwind for Nvidia in China, and it will be a test of the transatlantic relationship, not only for Donald Trump and Xi Jinping, but also for Nvidia CEO Jensen Huang, who has cultivated ties in Beijing as well, trying to ensure that his company still has a sizable enough footprint there to compete with the likes of Huawei. So we'll be, again, watching this phone call on Friday between Trump and Xi to see what is also said about Nvidia. Remember, Donald Trump and Jensen Huang have forged this relationship, a close relationship, and he is betting on Nvidia's success as part of the administration's broader AI program, Carol.
Mike Shepard wrapping it all up from Washington. We so appreciate it. Let's dig into what the investor sentiment is like. Tiffany Wade, Senior Portfolio Manager at Columbia Threadneedle, joins us. And Tiffany, investors don't care. Ultimately, Nvidia's down about 1.5%, but it rallied more than 6% last week. And you could say it's just a bit of profit taking. More broadly, markets at a record high and focused on the Fed. Should they be more worried about this tit for tat China-US?
Yeah, I think that's a great point. Nvidia is down a little bit today. There was also headlines related to China looking at some analog semi companies for dumping earlier in the weekend. Those stocks are barely down as well. So I think what that's telling you is that investors think that this is more of posturing by China in relation to trade talks, and that there's not going to be a significant impact on these companies' earnings over the long term, that it's really just posturing.
Tiffany, another piece of news this morning, the president posting on social media that American companies should not be subject to quarterly reporting. They should report earnings every 6 months. And the president also acknowledged that that would be pending authorization by the SEC. But as somebody in the markets, would you just react to that piece of news from the president, please?
Yeah, I think this is an interesting one, and there's arguments on both sides of this. The European regulator only requires companies to report every 6 months, so there is a model for this or a framework for this. From a company perspective, it likely reduces some of the reporting requirements for them, some of the reporting burdens for companies. But I think from an investor perspective, what it does is reduces visibility for investors, since we have less information points from companies. Potentially also increases the sort of information disparity between investors, institutional investors and retail investors, and then potentially also increases volatility because you have less touch points with the companies, perhaps a greater disparity between estimates and actual numbers from the company that could increase volatility around reports.
I love it in the context of data points. At the top of the program, we had the headline that Alphabet has joined the $3 trillion market cap club, right? And if you think about the story at earnings, it still was the hyperscalers sharing with us their capital expenditures plans. A data set, how would this idea impact those kind of soft data points that now the market really relies on?
Yeah, that's interesting for the hyperscalers and for the companies that are developing AI models, because they use data, right? The more data, the more powerful the models become. So especially with regards to models that are maybe intended for financial analysts or that are intended to help analysts with research, less data means less robust models.
What's interesting is there's always this anxiety that the amount of data, the amount of compliance means that it puts off companies going public. For last week, we had the busiest week for IPOs of a sizable nature in about 4 years, according to some. So what do you make of just this weighing up of demand, insatiable investor demand on one side, with compliance and overbearingness on the other?
Yeah, I think we've had a tremendous year for IPOs. This is certainly in contrast to the last 3 years. So the IPO volume so far through the middle of September this year is larger than it was for the full year of 22, 23, and 24. So definitely some pent-up demand from companies that have wanted to go public. I think it reflects certainly capital markets being open. Stocks are at all-time highs. Also a little bit of improved investor sentiment around, the confidence in the economy as well.
As an asset manager, should you be buying in? Initially, the bar was very high. Companies had to be profitable. They had to be showing growth on the bottom line as well as top line. But of late, that seems to have been pushed out the window too.
Yeah, you're definitely seeing some of that. The growth stocks coming back to market with no earnings or, earnings in a couple of quarters or free cash flow in a couple of quarters now is back. Certainly a good indicator for companies in that growthier part of the economy, that investors are willing to invest in some more speculative companies. But we've also seen IPOs in the last couple of weeks in the consumer space. There's another one coming this week in the energy space that seems to be very well subscribed. So it's not just in tech, it's really across the board.
Tiffany, I want to end the conversation going back to where we started today, which is the relationship between the US and China. We have a framework for a TikTok deal. The president will speak by phone with Xi Jinping on Friday, and Nvidia is caught at the heart of this negotiation. How much do you expect politics and political volatility to play into markets, particularly for technology, in the balance of this year?
I think technology is going to continue to be sort of a hot spot for tariff negotiations, especially with China. It's kind of the biggest bargaining chip that both countries have with each other. So I don't imagine that the volatility around that will quiet down, and it might even continue into future years, depending on how the Supreme Court rules on the IEEPA tariff.
Tiffany Wade of Columbia Threadneedle, handling every single news item of the day that we threw at you. Thank you very much. Now, coming up, Elon Musk buys about $1 billion worth of Tesla shares. We're going to explain why and also how next. This is Bloomberg Tech.
Elon Musk responded to an unprecedented pay proposal from the Tesla board by buying about $1 billion worth of shares. As you see, we're up 6% on the back of that demand. Let's bring in Bloomberg's global autos editor, Craig Trudell, for more, who is also part of the Elon Inc. team, just showing boldness, showing a support for the company that investors seem to like here. How did he orchestrate it on Friday?
Yeah, I mean, he did it in the midst of you and Ed talking with Robin Denholm at Tesla, the chair of the company. There's clearly a sort of coordinated effort on the part of Musk and the board to really generate excitement about the future of this company at a time when there's a lot of reasons to be really concerned, right? In terms of the here and now business, we continue to see signs of really difficult demand issues. We heard from Denholm that the board downplays the extent to which Musk is doing damage to this brand with his politics and his involvement in that realm. But he then proceeded over the weekend to do more politicking that I think raises a lot of eyebrows, particularly here in the UK, right? And so just how much there's really sort of meat to this optimism, I think, is going to be the question in the months to come.
So Caroline and I were explicit with Robin Denholm in asking, how did you, the board, define politics or political activity? Let's get some of what she responded with.
From a personal perspective, in terms of his political motivations, etc., is up to him. I mean, clearly, from our perspective as a board, we're measuring him on results and measuring him on what he does as a CEO of Tesla.
So part of the reason we posed that question is because literally in the days since the proxy hit and the comp package was proposed, Musk has been very active on X, talking in particular, Craig, about UK politics. That accelerated over the weekend. What's the latest?
Yeah, this very far-right convicted criminal, Tommy Robinson, puts on this march that I think did surprise a lot of people with how many people showed up. Of course, we should note there was a substantial counter-protest that showed up for this as well. But a lot of anti-Muslim rhetoric, a lot of talk about this idea of civil war, which we've heard Musk use that sort of rhetoric before. We've, on the backs of this, heard, Keir Starmer's spokesman and others in Westminster really, express alarm about this sort of charged language that we're hearing out of Musk. And, I think we're also in the U.S., of course, hearing over the weekend from the governor of Utah, where Charlie Kirk was assassinated last week, talk about the sort of evils of social media. And so on one hand, I think, from those comments that Robin Denholm gave, it's clear that the board is willing to give pretty wide latitude in terms of what Musk is up to on a political basis. But if they're measuring for results, there are indications that this is not helping Tesla's brand.
Bloomberg's global car czar, Craig Trudell, thank you. And just very quickly, to buy those billion-dollar shares, Musk used a revocable trust. Quite a few of you reached out to me to ask about that. It means that the trust can be changed in Musk's lifetime. It's a pretty normal tax-focused tool that billionaires in the United States use largely for inheritance planning. Another story. Last week, Oracle founder Larry Ellison momentarily surpassed Elon Musk to become the world's richest person. The shares of the tech giant surged after posting a major increase in bookings, putting Ellison top of the list, at least for a day. Here's the breakdown.
For a few hours last week, the richest person in the world wasn't Elon Musk. It was Larry Ellison, whose personal fortune suddenly skyrocketed.
Larry Ellison's net worth soared by $89 billion. That was the biggest one-day gain ever recorded on the Bloomberg Billionaires Index.
The cause of this giant leap? The company Ellison co-founded, Oracle, just had a bit of a moment.
Oracle shares have surged pre-market after the company posted a major increase in bookings and gave an aggressive outlook for its cloud infrastructure business.
Oracle made its name selling database software back in the late 70s, but in recent years it's become a tech behemoth, thanks to the key role it plays in cloud computing. And it's that demand for cloud services that has driven the company's recent stock surge.
Oracle's cloud computing business is really in demand by AI companies. That's essentially allowed it to reframe its narrative around AI and to ride the stock boom that's been connected with other AI companies.
On September 10th, it was revealed that Oracle made a deal with OpenAI, the creators of ChatGPT, worth $300 billion.
And I think a lot of investors and analysts are assuming that if it can do deals like that, there will be more coming down the line. If you've been paying attention to Oracle, this has actually been a while in the making. The last several quarters, this has been the story of their earnings.
After years of sluggish growth, Oracle's revenue is expected to take off thanks to the race for AI computing power that sent sales in its cloud infrastructure unit soaring. The new deal with OpenAI builds on a critical AI agreement announced in July.
This is an unprecedented cloud deal. I mean, this is likely the largest single cloud deal ever signed.
Ellison and Oracle are part of a $500 billion announcement called Stargate that Trump made several months ago. It's a partnership between Oracle, OpenAI, and SoftBank, and the goal is to build data centers for AI across the US, and Oracle will be a key computing power provider for that initiative.
While the likes of Musk, Jeff Bezos, and Mark Zuckerberg have all vied for Donald Trump's attention, Ellison seems to have succeeded in nurturing a lasting working relationship with the US president.
I have a high respect for Larry Ellison. He's somebody I know. He's been really a terrific guy for a long time.
While Oracle's share price has tripled in the 3 years since the arrival of ChatGPT, the AI revolution wasn't enough to keep Ellison as the world's richest person.
So this was a brief flirtation with the top spot for Larry Ellison. He was surpassed by the end of the day Wednesday by Elon Musk again, who has been in first place on the Bloomberg Billionaires Index for much of the year. There are questions of how long this boom in AI stocks can last. A lot of investors have expressed concerns that at least some of these companies are overpriced at this point. And there are fears that if the economy starts to slow down, that we could see a pullback in these stocks. And of course, if that happens, the billionaires whose wealth is tied to these companies, including Larry Ellison, will see a concurrent fall in their fortunes. Musk stands to potentially leap far, far ahead of all of his billionaire peers in the coming years. It was announced recently that Tesla's board has approved a $1 trillion pay package for Musk. He has to meet several very ambitious milestones in order to get all of that money. But if he does succeed in doing that, it could make him the world's first trillionaire, and there's no one else who would come anywhere close to that level as of right now.
And boy, have we talked about that pay package at length. Meanwhile, coming up, one of Apple's most senior AI executives is leaving the company, adding to the recent exodus. Details next. This is Bloomberg Tech. Time now for Talking Tech, and first up, Sony Pictures. Demon Slayer was the most popular film at the box office this weekend, and it has set a new high for the Japanese anime genre. It earned $70 million in the US and Canada, having already grossed about $280 million worldwide going into the weekend. Plus, Snap has a new operating system for augmented reality glasses, signaling the company is getting closer to launching a consumer version of the device next year. Now, Snap OS 2.0 includes an overhauled browser and updated AR apps. Snap is competing with the likes of Meta, Apple, and Google in the space. And Xiaomi, well, it's aiming to take on Apple with its latest smartphones coming out later this month. Currently, Xiaomi only has a sliver of the premium smartphone market globally, but it is well positioned to make gains in China, where the release of Apple's iPhone Air has been delayed, Ed.
Okay, I'm going to bring you a story that broke late Friday. Apple's Robbie Walker, one of the iPhone maker's most senior artificial intelligence executives, is leaving the company. That's according to sources. Walker's exit adds to an exodus of executives and engineers from Apple's AI division. Going to bring in Bloomberg's global consumer tech managing editor Mark Gurman. The story you broke, Mark. What was this executive's function and role that makes it so notable that it's the latest and another departure from Apple?
Walker was in charge of Siri. It's as simple as that. Yeah, he was leading Siri for the last several years, but he was demoted out of that role in the spring. when Apple realized that it would need to delay its new Apple Intelligence upgrade for Siri for upwards of a year. And after that, Walker was removed from his position. His boss, John Giannandrea, was removed from overseeing both Siri and Apple AI robotics teams. More recently, Walker has been overseeing a team known as Answers, Knowledge, and Information. It's called AKI internally. This is a new team spun up under Walker. And this group is responsible for helping build a new AI-based web search tool that's coming next year, designed to compete with both Perplexity, people going onto Perplexity to do searches, right? You've seen Google traffic go down on Apple devices in favor of some of these AI apps. So Apple wants some skin in that AI web search game. So he's been leading that, or parts of that. And so his departure is quite notable. And more broadly, he's on the senior staff of John Giannandrea. He's one of a few people who are leading the company's overall AI initiative.
And of course, time and time again, many others have been talking about how Apple is seemingly behind on the generative AI fight, but they're trying to remind us all of their prowess when it comes to innovation from what things look like, feel like. Talk to us about the product innovation they've been talking of.
Yeah, Apple on this last keynote, it didn't allow any distractions. It didn't raise prices. It didn't talk about tariffs. It didn't talk about shipment delays. It didn't talk about AI. It focused just on the core competencies. That's hardware, that's design, that's engineering. None of the distractions were there. All the focus is on these new devices coming out on Friday, except, as you mentioned, the iPhone Air delay in mainland China, which is a whole other story. But for all intents and purposes, Apple's focusing on what it needs to focus on, and it's probably setting itself up for a very solid holiday period.
Another really well-read set of reporting from Mark Gurman. We thank you. All things power on. Meanwhile, coming up, a framework to keep the TikTok apps running in the United States. Well, it's been reached. We'll have all the details next. This is Bloomberg Tech.
Welcome back to Bloomberg Tech. Two technology stories as told through the markets. The first, Alphabet, parent of Google, has joined the $3 trillion market cap club, joining Apple, Microsoft, and Nvidia. The market's talking about the idea that antitrust ruling that went in its favor, not having to divest Chrome, is a big catalyst. But remember, in earnings, Google Cloud Platform really taking market share. So there's momentum in that name, but it's a milestone in technology history. The other big one, and actually this is the most read story pretty much on the Bloomberg terminal and on the website, is about BYD. So BYD has seen its shares fall about 30% over the last 4 months from all-time highs that were hit earlier in the year. And Caroline, what a reversal in story. We started the year talking about how BYD was overtaking Tesla in all these markets like Europe and Asia, not just with EV, but hybrid as well. That chart says things have reversed a little. Tesla outperformance in recent weeks, BYD really slumping. Check it out on Bloomberg.com.
You should. And also, look, let's talk more about China, in particular the trade talks with China, because US Treasury Secretary Scott Bessent said a framework to keep the TikTok app running in the United States has been reached, and that President Trump and Xi could speak to complete this deal. Though the terms of the blueprint, they're pretty unclear. Let's bring in Bloomberg social media reporter Alexandra Levine. What's really interesting, Alex, is we've been very close before. Remind us of how close we came, but like 6 months ago.
Well, we came extremely close back in the spring. I think it was a couple weeks before the deadline had been reached. Vice President Vance said we are very close on a high-level deal. And then days before, President Trump basically said we are at the finish line. And then within days, the entire thing had all but imploded because talks over tariffs between U.S. and China had basically escalated. So even though it could potentially be an exciting week for TikTok and also for the roughly half the country that uses the app, there's still a lot that we don't know.
In the time that we've gone to air, there have been these headlines from China's side confirming that this framework's in place. So we have it from China and Treasury Secretary Bessent. And basically, the negotiators for China are saying that this is a good framework for both sides, but that China won't sacrifice its principles for this TikTok deal. I noted earlier in the show that one of the reactions to the news was Oracle shares rising. Remind us, if a deal goes through, who is going to own and operate and run TikTok in the United States?
So again, the terms of the deal are still unclear. Oracle, though, has for many months been floated as one possible leading contender here among other U.S. investors. Oracle would make a lot of sense, potentially, because Oracle and TikTok have this pre-existing relationship. They had been working together in the past on something called Project Texas, which was essentially a program aimed at helping TikTok secure and separate all of TikTok's U.S. user data in the United States and keep it basically separate from ByteDance's global operations in China.
Bloomberg's Alexandra Levine, I have a feeling you'll be back to talk about a TikTok deal in the days and weeks to come. Thank you very much. Stormtroopers from Star Wars vlogging with a selfie stick. Dogs hosting a podcast. Such AI-generated videos are taking over social media, substituting for news and other kinds of creative content all over our feeds. As we enter the earliest stages of machine-generated media, the debate has been centering around the impact on Hollywood. But what about its impact on social media? Bloomberg Businessweek editor Brad Stone takes a deep dive in an essay. It's hard to summarize, but basically everywhere on social media there's AI-generated video. There are more tools than ever available to do this, and we explain the industries that are being hit. But you've penned it in some detail through some case studies.
That's right. And Ed, you missed babies being interviewed. That's a new one these days. But look, this is an opening essay for our screen time issue. And I wanted to examine, what I'm seeing and what a lot of my friends are seeing in their social media feeds. And it is really incredible. A Rubicon has been crossed. I think back to this summer when you had this video of bunnies bouncing on a trampoline everywhere on TikTok, everywhere on Instagram. People thought it was real. And then there was an examination in the comments how one bunny seemed to disappear. And in fact, it was a creation of a 22-year-old named Andy Kozovsky. He did it one night when he was bored. The key here is Google's tool VO3. What's different about VO3 is it's not only raised the bar in terms of video generation, but it has also raised the bar in terms of audio generation. You can enter in a few prompts. You can enter in a script. And essentially, the dogs who are talking, the babies who are talking, not only are they saying the written dialogue, but their lips are moving. Right. So it's really kind of a perfect deep fake.
The 22-year-old basically made that bunny disappear on purpose to create the discussion around all of it, Brad. But what's so interesting is he's really strong on saying this is democratization as we see it. How much is it upending actual creators' work? How much are we seeing Hollywood adopt and embrace this or not, as the case may be?
I mean, it's really starting on social media. We saw with the Hollywood strikes a few years ago, a great resistance among the industry around the embrace of AI. Now we are seeing that begin to change. I mean, recently, Amazon, or a studio affiliated with Amazon, announced that it would be finishing Orson Welles' film, The Magnificent Ambersons, using AI to recreate some lost scenes. So it's beginning to seep out. But, we're looking at the dog podcast right now. That's a Montreal company called Dogpack App. They're trying to market themselves. And they've got dogs talking. It's kind of cringe. The humor is very dad joke. But, people are responding to it. You kind of see it everywhere on social media right now.
Who doesn't love a dad joke? Brad Stone. Brilliant opening piece. We're all so excited about screen time. Thanks very much indeed. Meanwhile, coming up, we're going to be talking about startup Lila Sciences. It's aiming to turbocharge scientific discovery with, guess what? Using AI, of course. We'll talk to the CEO about the latest funding round. It's big. This is Series A. This is Bloomberg Tech. This is Bloomberg Tech, and you're looking at a live shot of the principal room. Check out the Bloomberg Tech podcast. You can find it on the terminal as well as online on Apple, Spotify, and iHeart. This is Bloomberg.
Startup Lila Sciences has just closed a $235 million Series A funding round. The company aims to create what it called scientific superintelligence by developing AI that runs thousands of scientific experiments at once. Let's bring in Jeff von Molthaus, the co-founder and CEO of Lila Sciences. That is an eye-catching Series A. And I think the best place to start, Jeff, is just with the basics of explaining what it is Lila wants to do. Because, you know, maybe the money gives credibility, it gives you the news headline, but there's a very specific focus that you have.
Yes, first of all, thank you for having me. Lila's mission is the reason for this fundraise. Our mission is scientific superintelligence to solve humankind's greatest challenges. That is, of course, a lofty mission, but what it means is that we're trying to build a kind of beautiful mind that can be a polymath across fields of science, materials, chemistry, and life, and become super intelligent within them by running the scientific method itself.
Jeff, we became accustomed in 2024 to these very large Series A's all over the world, actually, particularly those focusing on specific models. Why do you need that level of capital from the beginning? What is it that requires that capital to be deployed?
Yeah, first of all, I realize that by saying scientific method, I've either given euphoria or PTSD to audience members that may have enjoyed or not their most recent science class. So what's special about Lila is the realization that AI is now positioned to be able to run every single step of the scientific method. Scientific method is the most valuable wheel that has ever existed. And the reason for scale capital is running the scientific method at scale is going to lead to scaling laws for scientific intelligence that will go beyond what's possible with scaling laws of the internet and previous human knowledge alone.
Jeff, it's interesting where you stand. We've just seen the interesting investors coming on board and the pension money, the big pockets wanting to put money to work. But ultimately, look, call me a cynic, we've had an awful lot of scientific AI companies coming in, offering a new world of medical advancement. Why are you different? It seems to be something about the lab.
So the mainstay of scientific AI companies are sitting in a small niche of science focused on a specific application. The insight that led to Lila is the same kind of insight that led to the modern scaling laws and ascent of large language models and reasoning capabilities, which is that we no longer need to compartmentalize science into a whole bunch of tiny subdomains. But instead, one can build a single kind of mind that can operate across an immense diversity of scientific fields and pull new knowledge into that single mastery of the way that the world around us works. And we believe that this is going to open up incredible frontiers across those subdomains and between those subdomains in medicine, energy, new climate technologies, and a lot more.
Jeff, we started this conversation by saying that Lila focuses on running thousands of experiments at once using a single AI model. Is this you taking advantage of quantum computing to do that, or accelerated computing, or both?
Primarily the latter for now, but if you will, a beautiful mind for science needs a new kind of body. And those who are training only on data sets of the past are going to hit a ceiling of scientific intelligence. And that wheel of the scientific method, of course, has been in human minds and hands for all of our existence. And we believe the paradigm of what you're seeing behind me allows science to ascend into a higher intelligence, higher scale, and higher speed. And the implications of that are that we're going to be able to pull inventions out of the future like has never been possible before.
Well, when you start announcing some of the paying customers, you've got to come and tell us about it. Jeff von Molthaus, we appreciate it, co-founder and CEO of Lila Sciences. Now, let's talk about Mercado Libre, Latin America's e-commerce and fintech giant. It's just got a new CEO, Ariel Szafstein. Will be taking on the reins next January after Marcos Galperin, who co-founded the company, led it to become the region's most valuable firm. Well, he's handing over the reins, and let's just hear about what the incoming CEO had to say when asked about his vision for the company for the next 10 years. He spoke in his first exclusive interview with international media as incoming CEO.
I think we've done tremendous things over the first 26 years. But the opportunity for us in the next 26 are equally big or even bigger than what we've done in the first era of Mercado Libre. I think the opportunity to continue increasing the size of our e-commerce business through e-commerce penetration in retail is still very big in Latin America. Digital advertising is nascent in Latin America, and we are convinced that we can drive growth in that atmosphere. And last but not least, fintech, right? So financial inclusion in Latin America is still pending, and we can be the protagonists of the process of bringing more people into financial services across the region, as we have been doing over the last few years.
Coming up, US Energy Secretary Chris Wright joins us. That's next. He's going to discuss his European swing, powering the AI revolution, and a whole lot more. This is Bloomberg Tech.
The US and the UK will sign an agreement to make it quicker for companies to build nuclear power stations, but the countries will use safety assessments of reactor designs from each other to fast-track their checks. The announcement comes as President Trump prepares to travel to Britain tomorrow, with more economic deals expected to be announced. Already in Europe, doing deals is US Energy Secretary Chris Wright, exactly the person we want to talk to about the opportunity of nuclear, particularly in our world of AI. How quickly do you think it'll be brought online in the US or indeed the UK? Because your timeline is fast, it seems.
It's aggressive, Caroline, and that's President Trump. You know, he came in all in on nuclear energy, and we will have reactors, these next generation small modular reactors, critical next year. In fact, I'm pretty confident we'll have one of them before July 4th of next year, and several more during the year. Now, it's not the back end in electricity production, but it's the whole nuclear system running, demonstrating how it'll work. I think this will expedite final permitting and sales and commercialization of the reactors. It's going to move fast.
It's not just fission, but fusion as well. Just how optimistic are you there? 8 to 15 years, I saw. Is that realistic? And how self-dependent would that make the US for, 5 gigawatt designs that we're currently seeing just coming from Oracle and OpenAI alone?
Super exciting. I worked on fusion energy in college 40 years ago, and we've seen steady progress for the last 40 years, mostly at the national labs, at the Department of Energy. But with AI and commercial fusion companies coming into space now, the pace of innovation is faster than ever before. Yeah, I believe we will know the commercial pathways to fusion during the Trump administration. And as I said, I think we'll see commercial electricity from fusion energy could be as fast as 8 years, and I'd be very surprised if it's more than 15. It's coming. It's coming, and it's exciting.
Secretary Wright, as you travel across Europe and head to the UK, what kind of instruction has the president given you to put these energy deals in the context of national security and defense?
I think the president has talked from his campaign that his goal was prosperity at home and peace abroad. And he understands instinctively that both of those are intimately tied to energy. You need low-cost, abundant, affordable energy at home to lower costs for Americans and make businesses thrive. That's the same agenda overseas. Here I am in Europe. They're very, of course, shocked at what happened with the Russia invasion of Ukraine and their energy dependence on Russia. Everybody gets that was a mistake. They want to switch that dependence from Russia onto the United States. We are bringing them assurances we can continue to wrap up natural gas exports into Europe as a safe, secure partner. And of course, there's huge enthusiasm for American nuclear technology over here. You want to get your energy and your key strategic inputs from your allies, not your adversaries.
When President Trump took office, he pledged to cut electricity price in half within 12 months for everyday Americans, Secretary Wright. In the time since the president's been in office, electricity prices have risen 10%. Is he still able to make good on that election pledge? And how does he get there?
Look, the president is a very ambitious, aim-high guy. He is absolutely committed to lowering energy prices in the United States. We've seen that in gasoline and diesel and oil products. We're seeing screaming increase in U.S. natural gas production and prices there as well, not rising at all. Electricity grid's harder. It's just long time frames. Long time frames change that whole system cost. But if you look at it on a micro scale, the president is ready to permit, and we are permitting immediately, electric generating capacity that will be less than half the cost of the stuff that was built under the Biden administration. So are we adding new capacity on the grid that's less than half the cost of the Biden administration? Absolutely. The president's adamant about that. For that to filter in for the whole grid cost to come down meaningfully, that'll take some time. But rest assured, we're driving as hard and fast as we can.
Secretary Wright, you've been driving hard and fast when it comes to, well, updating, it feels like, the Department of Energy's view on what to use when it comes to energy sources. And in particular, I'm thinking about the thought leadership. Back in July, you put forward what was a report. It was deemed about the threat of climate change and said basically it's exaggerated. Now, that working group has been disbanded. Many have been critical of some of the findings. Do you just still stand by those findings that were ultimately saying a lot of the, well, climate views were wrong about the speed at which the globe is getting hotter, at least?
Actually, no dispute at all about temperature and sea level data. What we did was just popularize the data that the climate alarmists and the politicians don't want to popularize. 90% of what's in our climate report is in the Intergovernmental Panel on Climate Change reports. I've been studying this issue for 20 years, so quite familiar with it. 5 fantastic scientists produced that report. And of course, environmental groups that don't want an honest, fact-based dialogue about climate change sued over a silly procedural thing about the paperwork for one of the 5. And instead of fighting this in court, the climate scientists, I'm sure they'll still respond to the questions. We've opened a real dialogue about climate change, and that's exactly what we wanted to do. And I couldn't be happier about it. It's funny, I go on more and more shows talking about climate change, and no one wants to ask me any questions about climate change.
Well, I'll keep asking you if you don't. I'll ask you, because why did your department undertake it in such a way? It seemed that the study wasn't following usual procedures like the OMB's guidelines on science reports.
No, this is when you publish a technical paper, when you publish the paper, that's when the dialogue starts. We wanted to publish. This was from no scientists at DOE, although we did do peer review at DOE. These are 5 independent scientists that we said, please write a report that just sort of summarizes the big picture about climate change so we can publish it, open it up for public comment. And we've got tons of comments. Now, lots of them are silly, but what you can see from the substance of the comments we've received is there's very little disagreement with the data we published on temperature data, sea level data, and models. People are complaining around the edges, or mostly complaining around, yeah, but the future might be different. That's true. We don't know the future, but I heard 20 years ago the future might be different. We're just publishing the real data on sea level rise, on temperature increases, on the effects of carbon dioxide in the atmosphere, which makes the planet greener, a little bit wetter. Climate change is a real thing, but it's just been so wildly exaggerated and misrepresented. And it's made the climate scientists that go on TV only the most dramatic, alarmist ones that make TV news. Most of the honest, sober ones are in the background. We're bringing them to the forefront.
U.S. Energy Secretary Chris Wright, currently in Vienna, but continuing through Europe. Thank you very much for joining us on Bloomberg Tech. Just a quick update. Nvidia shares have swung from a pretty notable decline to positive territory. You remember the story broke this morning that China's market regulator had said that Nvidia violated anti-monopoly laws on the 2020 acquisition of Mellanox. That was a bargaining chip, pardon the pun, right, Caro, in the context of these US-China talks that are happening, and it's a big week in that context.
It is. And remember, it was a big week for Nvidia stock last week. It added about 6%, so maybe there's just a bit of profit taking earlier today. That does it from this edition of Bloomberg Tech, but don't forget to check out our podcast. Find it on the terminal, as well as online on Apple, Spotify, and iHeart. From New York and San Francisco, this is Bloomberg Tech.